Hello guys, this is the post analysis of that GBPCHF trade. This is how it played out, but I learned another lesson that I was so mad and angry myself because of this trade. This was the analysis here. Psychological level or an area of interest. Area of interest. Coming to this level, price have tested this level the first time, tested the second time, and came for the third time. I know it. We always wait for the third touch, and this is a third touch, a bearish engulfing, a little retracement. So we are expecting from here price start dropping massively to the downside. That's it. And these are the confluences. The weekly is bullish, weekly is bearish, daily is bearish, 4 are bearish, 1 are bearish. Area of interest is here, daily touch of EMA, 4 are multiple week rejection, double top, 1 hour double top, 1 hour touch of EMA, 1 hour bearish engulfing, 30-minute bearish engulfing, in total of 110% based on my confluences. So I've entered this trade already and the time is 4:23. I trade time. That's the trade analysis right there, the pre-analysis right there, and this is how that trade play out. Obviously this toolbar look like this when I play the trade. So overall this trade will come to the downside, especially this new week that is opening in a couple of hours. This trade, this is the overall movement of this particular pair. This is our movement. So what happened was that I entered that particular trade that day around 4 a.m. at this candle right here. Price come like this and positing. Something to indicate. Price came here like this. I enter here. The next 1 hour, price push down like this. The next 1 hour, I think I was sleeping back because I entered the trade and I went to sleep, and price started pushing back to the upside. When price was doing all this, I know that price is coming to give another confirmation because this was double top already. First touch of the EMA at the 4 hours resistance level, and this push, I consider this one as well, because if I was to draw this resistance level at this point, it would be 1, 2, 3. So I consider this as double top. I consider this, since I know what I'm doing, I know that this trade was to go to the downside. And when price was here, that was 10 a.m. After price did this, there was a push to the downside, which was bearish engulfing candle and a break of the EMA. You understand? So I said to myself, if it means that if I was not in this trade around 4 a.m., this is where I would have been looking forward to enter this market around here. Because if I go to the 30-minute, you will see some move there. Don't forget this was our entry here. So that push around 10 a.m. happened somewhere here. So if I was not in that trade, this was supposed to be my entry. This bearish engulfing, that's right there. It was a bearish engulfing. If I was not already in this trade, it was supposed to be after this bearish engulfing, after price engulfed this one, it was supposed to be my entry. Immediately I was supposed to enter here. Do you understand? And based on my trading style, at times price will always come back to my entry multiple times. Price will always come back to my entry multiple times to test that very level, because where I'm entering the trade is a potential level in which price must come back to that level multiple times to test it. So I was in this trade. I entered with one position. I was risking $200 of my personal account. I have a 7K account. I was risking $200. So after all this move like this, after seeing all this move, I think I was up about $300 if I'm not mistaken. I think I was up $300 if I'm not mistaken. No, when price came here, push back the downside, price come here again. I think I re-enter somewhere here. If I'm not mistaken, I re-enter somewhere here. So now I had two positions, one position from here and one position at this. I'm sure it's this level or this point right here. I re-enter. So when price pushed down like this around this level, I was up in total $500. I knew that price would shoot to the downside. The market was just moving slowly. Market was not moving the way I was expecting it to move. And the next thing that happened around 2 a.m. was that price started retracing back massively. What I did was I break even, but I did not break even at my entry level. I break even below, like I was risking $200. One of those position, I break even and my risk was just $60, and the other one I break even, my risk was $120. In total, it was $200. So I said to myself, okay, let me break even, let me risk. Since my initial risk was $200, let me risk that $200. Meanwhile, what I was supposed to do was break even normally, like putting price before my entry, so that if price come back, price will not hit me with any losses, and that would have given me more opportunity to re-enter the market again when price was shooting up like this. Because when price shoot up at this point, I think market take me out somewhere here, and price keep on coming up. When I saw this, but the push to the downside was not broken, I said to myself that price is going to drop back, na emotion and all the rest. So price came back and I was down $200. Then price shoot to my direction, direct to take profit. Because if I remeasure this thing, you see that this is my 1:3. My target is always 1:3. Do you see that? That's not risk to reward ratio, 1:3. I said immediately after price took me out, in less than 50 minutes, less than 5 minutes, the next candle that opened went straight to my TP. I was very, very angry and devastated. Very, very mad. Very, very mad. But at least I learned something. So those were the mistakes I was making throughout this week. So next week I'm going to be correcting all of those mistakes. Once I enter now, I will not add position. Even if I add position, it will not be in my same account. I will find another account that will re-enter the trade there. So that's it for the GBPCHF trade, and I swallow a hot pill on Friday. Okay.